Good morning, everybody, and warm welcome from the beautiful garden route of South Africa. And here's to another great week of trading. We've obviously managed to weather a couple of interesting weeks over the last month or so. And I know that there's been quite a lot of engagement from you guys. Some of you felt that it hammered you quite badly. Others, I'm very proud of you. You managed to step back from the markets, identifying when conditions were appropriate and when not. But not only that, I think in the last week or so, we've managed to pull back quite nicely from quite a brutal turnaround that we had. What was it, the week before last? One thing that a couple of folks have mentioned to me with these Monday morning market reviews is that I move through the charts quite quickly. That is obviously the case because there is quite a bit to cover in a reasonably short space of time. But if you do feel like you'd like me to spend a bit more time on any particular instrument or time frame, then don't hesitate to make a note of that, drop it into the chat box. And likewise, if you're watching this as a recording, then feel free to, I mean, you have the luxury then, of course, of being able to pause the recording, but feel free to drop a comment or question into the comment box below, be it either on Facebook or on YouTube. And certainly we do keep an eye on that, and we'll get back to you to respond on that. Another point as well is I'd like to ask you folks to consider where you feel some additional training would be worth your while. We'd like to get our Wednesday and Thursday morning training going again. So on the one hand, we do have a sort of, we loop through the material from beginning to end, but I also would like to make sure that I'm spending time on particular issues that you may be finding challenging. So do remember that you just need to drop in a comment again, or even send us an email at support@gptacademy.com just to request that we cover a specific part of the training in a bit more detail. Also, on that note, remember that the material in the Academy is being updated on a continual basis. For me, learning how to teach people is an ongoing thing. So it's very often from your feedback as our members where I realize that maybe I can explain something better, and I go back and do that. I've also upgraded or updated some of the strategy rules over the last few months for our core strategies, because again, we've on the one hand, when I start off teaching something, I give you the more basic version, and then as the understanding of the members climbs and you're ready for more detailed information or training, I do add those in, as well as a few little tweaks that we may adopt along the way. So there's going to be quite a lot more material coming out with regard to the overlay approach, as well as hybrid strategies in the coming months. So do keep an eye out for that. And then finally, of course, those of you who are using the Trade Manager, I hope that you've been finding that useful. You can see it really reduces the burden on you of having to look at your charts as often as you perhaps otherwise have been doing, and let all of the admin of the trading be taken care of for you. All right, so let's jump into the charts then, starting as always with the Euro USD. Just as a broad comment, I'd say last week was a pretty quiet week overall. There was some nice trading though, so it was a nice solid week. We've got quite a few open trades at the moment on certainly our core strategies, and there's there's certainly still potential for a turnaround in those not sort of turning out to be profitable. But as I say, a reasonably quiet week, not a very fast market movement. A lot of our trades are already at break even. So, when you have a situation where lots of the trades are already at break even but haven't hit take profit, you know that it's been reasonably quiet. All right, so starting with the euro, let's look at weekly. We still are in that range, but last week's candle did ring the low of this extended, almost 2-month bearish wave that we've had all the way down from that preceding resistance level. So respecting this overall area of support for now, in any case, but that, on the weekly time frame, being inside of the range, we weren't looking to trade that on our daily impulse, but because on the daily time frame, it's represented by a trend, we have been keeping an eye on it, as you know, over the last while. But certainly last week represented a breakdown in the sequentiality of cyclicity. In fact, it confirmed a preceding breakdown where we failed to get another bearish phase one or impulse wave. And we've had a couple of corrective or phase two waves here. And then last week giving us this bullish impulse wave, also giving us quite a nice winner on the overlay. So quite a follow basically, I suppose, from the preceding week's turnaround that we saw across many of our markets. Now, obviously, that means that apart from an overlay, we haven't been able to trade those pairs that have done something like this because the trends that we've experienced are over, apart from overlay stuff, obviously. On the cable, here on weekly, we spoke last week about how we saw the market bouncing potentially off of the support level. Well, that low was ringed with last week's candle, a nice strong bullish impulse candle, keeping the market certainly very clearly inside of that weekly range. And there you have it on daily with a long extension of that wave that we saw starting the week before. It went all the way up, broke above this secondary resistance level, and is now also above the 55 EMA, which is also a form of dynamic support. And you can see how Friday's retracement to that level has been respected so far. But nevertheless, we are still inside of our channel. We don't have any WM patterns to look at. But what we can say is that's a bullish phase one wave, which after that bearish movement that we'd had for quite some time, and that brutal turnaround that we had the week before last, as I mentioned before, this is just another representation of that. And as one of the reasons why in the majors and minors, certainly, and even the yen crosses, there hasn't really been much for us to trade. Most of the trading has been across the pairs lower down the list, certainly euro and pound and Aussie crosses and so on. All right, dollar yen, likewise here on weekly, inside of that range. Nothing really changing with last week's inside bar there on the weekly time frame, and looking like that on daily. So really no real interest to us. We did get a close outside of the four-wave channel on Thursday, but Friday pulled it straight back inside. So didn't really do much there. Having said that, this bearish wave is not yet technically over from a single time frame point of view. So you never know, this might carry on in a bearish direction, in which case we may well start looking to trade that. So do keep an eye on that. Dollar Swiss on weekly. So yeah, also inside of a channel, has been for quite some time. Last week's bearish impulse candle and impulse wave was quite significant, though, obviously ringing that previous high over there. So looking like this on daily with a bearish breakout on Wednesday. So this certainly for H4, those of you who are trading at H4 impulse, you would have started looking for a short there already, and I'm pretty sure that we're in one of those. Let's just drop down to H4 time frame. Okay, so you can see how that was an extended bearish move without a single pullback until we got the pullback over here. So, which was what, on the 30th. So that was already on Friday, and not very friendly when you get the bearish move and the impulse candle and an immediate pullback. You did survive that retracement, but at the moment, obviously, still very much going sideways, and it is still early in the day for this for the week, obviously, and for Monday. Let's wait and see what happens. But that's what we do, and that's what our trailing stops are for. So let's just follow that one and just follow it all the way through, see what happens. There is no way we can predict these markets ever. All we can do is follow our rule sets and let the rest take care of itself. Okay, so weekly time frame here on USD CAD, you can see we had that high ringed by last week's bearish impulse candle. So this general was support and now resistance level being nicely respected there. Obviously, that doesn't mean that we can necessarily trade it. on that time frame. And here you can see where, again, it's a representative of that significant reversal pattern that we had there. So nothing doing for us at the moment on USD CAD. It's one of the pairs where we are able to trade it quite actively for quite some time, but pretty dead at the moment. Right, here's something that's a bit more interesting. Obviously, Aussie USD still very much in this bearish trend on the weekly time frame. But it must be said, of course, that last week's candle ringed that low. So that long extended bearish phase one wave is now over. We discussed it briefly last week, even though this the preceding week's candle was an impulse candle. It was also a low test or a hammer. So it kind of showed the potential for this wave to come to an end, and in fact it now has. So that of course means that daily impulse trades as of this morning are off of the table. If you are trading the hybrid approach though, you may well be looking for something, and in fact Friday did give us an impulse candle. So if you're trading the a hybrid approach, then certainly you would have jumped into a trade, or would be jumping into a trade this morning. But if you're trading the daily impulse, then please note that that actually is not a valid trade for the rule set for the daily impulse, because we are not in a phase one wave anymore on the weekly time frame, which is the higher selection time frame. So please do bear that in mind. And if you are trading the hybrid, remember, so the targeting is the main thing. That's a bit different. We look to target quite differently on that. All right, so that's the Aussie. Kiwi still here on the weekly time frame, respecting that support level last week, again bouncing off of that level. And here on the daily time frame, you can see it's just that choppy sideways movement. So nothing tradable there. Moving into our yen crosses, euro yen, we again, as we saw also on the euro USD, this bearish, extended bearish wave on weekly time frame is now over with a ringed low. We did, as we mentioned before, we have come back inside of the full wave channel. Last week it respected what was support and is now again resistance. Let's wait and see what happens here. Now, technically, this is still a trend, because this bearish wave is in fact a phase two wave, as you guys will know, because we failed to get a lower low, lower close. So with this bullish trend still technically intact, you might be thinking that this is interesting. Well, of course, obviously, it's very, very weak. It's borderline to being a ranging market, definitely very weak. But having said that, if you are purely a channel trader, and we do get an outside close, we'd have to wait for the end of this week, obviously. So we'll be talking about this next Monday. But if we get a bullish outside close in this, we may well be looking to start trading this in a bullish direction on the daily impulse again. On the daily time frame, that bearish trend definitely come to an end. We spoke about this a week ago, but subsequently during the course of last week, we did get another phase two wave testing at the moment this resistance level, but very much now inside of quite a broad channel. No WM patterns for us to use at the moment. So when it comes to any core type of trading, so yeah, we can look at that again sometime in the future, but at the moment there's nothing doing there. Greg's just asked a quick question about the 55 EMA. Yes, absolutely, because it's a fib number. I've used the 55 EMA successfully for 15 years. It's something that we could talk about in the future, but again, it's all price action based. As you know, I'm not a fan of using indicators just as indicators, but I find that the 55 EMA is quite a reliable source of support and resistance, dynamic support and resistance, and even more than that, is just a quick tip while we're on the topic. I find that the phase two of a trend on the higher time frame will typically retrace to the 55 EMA on the lower time frame. So if you've got a trend on daily, a phase two on the daily will often come to an end at or around the 55 EMA on the H4 time frame. So sorry, I can't help myself. Let's just have a quick look here at Aussie. So let's just, I think it was Aussie. Well, you can actually see here on the 4-hour time frame how the retracement initially from this bearish trend on daily, how that 55 EMA offered amazing resistance for a while, until obviously eventually it did break through. But even after it broke through, you can see how it bounced on it again. So remember, this is not a predictive game at all. So yeah, what else was there? Just looking further back in time, you can see that it certainly has played its role quite frequently in terms of offering dynamic support and resistance. So it's just a sort of a step further in terms of using support and resistance, which, as you know, is all about price action anyway. Okay, so let's get back to our market review. Excuse me. All right, so here we are on GBP JPY, similar picture to what we just looked at on euro yen here on weekly, also finding support with this low being ringed last week, and also inside of the channel. So exactly the same conclusion basically is what we had for the euro yen, and a similar picture here as well. Nothing really for us to do back inside of the channel, nothing really going on. And of course, this long extended retracement after that vicious reversal that we had the week before, giving us this very deep V-shaped pattern over here, came to an end with Friday ringing that high. But otherwise, not much else for us to do. Swiss yen a bit different, obviously. Been out of any kind of trending conditions for a while. Again, last week gave us a bullish impulse candle, also giving us a bullish impulse wave, ringing that previous low, but nothing really for us to do on that time frame. And even here on the daily, still inside of this extended bullish wave. We have not had a lower low for, well, 2 weeks now, effectively. So continue to make higher lows all the way through. Obviously, we're more focused on the higher highs, but it's interesting to note that not a single lower low, which of course would have also given us the potential for a wave somewhere here using our 3 steps to heaven methodology. Friday broke outside of this resistance level. This is not the 4-wave channel. This is like a ghost of the 4-wave channel future. But also, if you're using, for instance, an 8 EMA channel, 4-wave channel, then this would it's a more it's a resistance support resistance level of the future, and you can see it's broken through it, and that is indicative. But until we do get a bearish wave, we can't really do anything with this because we are still inside of that channel for now. CAD yen, another picture just similar to euro yen, back inside of the channel. Also, again, last week, continuing to respect what was support now as a resistance level. So nothing doing there. Same picture here with that V-shaped retracement. The only difference being that we did actually get a bit of an additional wave in here. Not that that's helping us at all, but it certainly does mean we had phase two, and now coming back up again. But yeah, it's quite a wide channel, this obviously. And there is potential for trading WM patterns on this one, more so than the others. But at the moment, there's nothing. Aussie yen weekly. So here we've got this extended bearish movement. If you are a WM pattern trader, then as you know, we've had a valid M pattern for some time, but it is very much still inside of the channel. Looking for that, by the way, let me just go back to this. You know, once we get another wave or two in here and we're able to advance our 4-wave channel, it does mean that in the future we are going to be outside of the channel. The fact that the channel boundary at the moment is down here means that we are in it. So just remember that as soon as we are able to advance, in fact, as soon as we get another bullish wave here, as soon as a low gets ringed, then immediately we're going to be moving our channel boundary there, which means we are outside of that future channel boundary. So you definitely want to keep an eye on that. And of course, if you are a WM trader, then you have already been trading this. So, and here we have it. So where we had this bearish movement, we had phase two. But of course, if you had jumped in on this one, I know some people did, even though strictly speaking, it wasn't a bearish impulse candle, basically because of the tail of that candle there, then you're still in this, so it's fine. Otherwise, if you'd waited until, well, it would have been this morning, obviously, you would have shorted the market with this bearish impulse candle. Now, the thing to just bear in mind is, on weekly, we've got this inside bar here, and we're treating this as a continuation bar. But if you were looking on the lower time frame cyclicity to confirm whether this bearish or the bearish wave on weekly is still intact, as we discussed in the bootcamp, then you'd have to conclude that the wave is over because the trend is over. Phase two. It doesn't mean we're not going to get a continuation, of course, but from strictly from a rules-based point of view, that would mean that this is in fact a hybrid setup and not a daily impulse with that preceding breakdown in cyclicity over here. So, but if you are, as you can do, certainly with the more aggressive approach, and I would generally go with this myself as well, just on the higher selection time frame, if you want to treat that inside bar as a continuation of this bearish phase one, then that's fine as well. So either way, then I would say, you could certainly have shorted this already, even if it was only this morning. Kiwi yen, not so much. So not as interested in this, obviously. We did have that higher C close in there, so it's not a valid M pattern. New Zealand dollar just generally across the board, not showing the directional bias that we're seeing on the Aussie pairs. Okay, so moving into our euro crosses, we've been not able to do anything on euro GBP for some time. Last week, the week before, obviously we had that high test on weekly, but last week obviously ringed that as a high, very much inside of the channel. Not interested in that, and of course that's what it looks like on daily. Last week, coming back down to the support level and absolutely respecting the channel boundary there. So still nothing for us to do. If you were trading the overlay approach, but as a ranging strategy, then different story. You may well have gone long on this on Friday or Thursday. No, I think Friday. But we stay away from that for now. Okay, so Euro Swiss, yeah, my least favorite pair, as always. I've, by popular request, have now included Euro Swiss in the trade manager. So for those of you who've been wondering, when I'm going to do that, it's now been done. So Euro Swiss obviously breakout on the close of last week. So looking like this on daily, been an extended bearish move here, which is somewhat out of character for this pair because of the longer term correlation between the euro and the Swiss franc, but that certainly has not held up over the last couple of months, or certainly the last month. And if you have been trading this, fair enough, but for daily impulse, only from this week would you be able to start looking at it. Whereas obviously if you're trading H4 impulse, you have been able to trade that on the lower time frames. And there have been multiple setups. Some of them worked, some of them didn't. But by and large, it's been pretty profitable to trade the Euro Swiss on the H4 impulse over the last couple of weeks. But yeah, looking forward on this at the moment, there's nothing, we certainly can continue to do that. But until we have a breakdown in that sequentiality of cyclicity, we would consider this trend to still be intact. And if you're trading H4 impulse, you can see that this bearish cyclicity is still very much intact as well. Right, so moving into some of the more interesting instruments in a minute or so. Euro CAD, not interesting here on weekly, of course, also with that high test being ringed last week and looking like that on daily. A very extended head and shoulders pattern over here. But if you have been wanting to trade this, well, it's been a while since we could. And obviously with the pullback and the low and high giving us that phase two through the course of last week, then definitely confirming that that is not a trend. Euro Aussie on weekly, so still inside of the channel, obviously here on a weekly time frame. But remember, likewise, when we are able to advance our channel boundary here, we're going to be outside of it. So do keep an eye on this. It's still something that we will be watching in the weeks to come because we've got this quite extended bullish wave here. looking like this on daily. So certainly something that many of you have been trading and trading very profitably. Euro Aussie definitely being one of the pairs that's helped to make quite a strong week last week. And here you can see some of the H4 impulse trades. Again, you win some, you lose some. I see that in actual fact, this morning, we've actually take profits on the most recent one. So that's quite nice. And especially after having been taken out, actually, with a loser on the preceding setup, that's made up for it quite nicely. But out of these 3 trades, 2 were winners, and one was I think about 0.6, 0.7% or risk unit loss. Well made up for on this with about 1.5, and this about 2.5. So about certainly well over 2% if you're risking 1% per trade. One on this one in the recent past. Euro NZD, not so much. Again, the Kiwi cross is not really interesting at all. So this is the most sideways probably of all of these pairs. Certainly competing for prize for that. Right, so here on GBP Swiss on weekly, had this low ring, so the support level continuing to be respected. Having said that, it closed pretty close to the support level last week. Just, yeah, that's actually not, this is wrong. There we go. So yeah, let's see what happens. If we do get a bearish breakout over here, then it's something that from next week we'll be looking to trade. So looking like this on daily, again, that test of that support level on weekly was where we had this turnaround the week before last. But came straight back inside of the channel, so nothing for us to trade on that one. And likewise, GBP CAD, not really interesting at all. In fact, an even more violent turnaround on this, as we discussed last week with the phase one. So quite choppy activity, good market conditions to generally stay out of. GBP Aussie, another very friendly pair to us over the recent past. And you can see last week's bullish impulse candle taking this quite far outside of the channel. So certainly it's something that's been we've been looking to trade on daily impulse, and we spoke about the setups previously on this. Through the course of last week, we did have a daily impulse take profit being hit, but it really just continues to be one long extended bullish wave, at least for the moment. It lost a bit of quality through the course of last week after that strong impulse candle that we had on Tuesday, I think it was, with the next 3 candles, Wednesday, Thursday, and Friday, not giving us an impulse candle. But nevertheless, if you're trading the H4 impulse, then this is something that you'd have been looking at through the course of last week. And again, so looking across the trades that we did have, I think some of these go back more than a week. So we would have discussed some of them before. This one being stopped out for a loser, bearing in mind that we're using deeper targets for these when they're more like of a hybrid approach. This one being a nice winner, a standard H4 impulse winner there as well. But at the moment, we're still sitting in a trade for a standard H4 impulse here. With a stop not yet at break even, your stop would 1, 2, 3, 4, 5 be. We would have moved it here already, so I can just update this really quickly. So 1, 2, 3, 4, 5, 6. There we go. So you'd have trailed your stop to this point for now, which is well under half of your original risk. So yeah, definitely been one of the nicer pairs for us to trade. Pumlani's asking, why don't we have a 21-day historical Donchian channel weekly time frame? Well, it's because the 21 HDC channel is there for single time frame continuation strategies, and we don't do that on weekly. We only trade single time frame continuation strategies on daily. And for those of you who've done that training with me in the past on things like short kickstarts and so on, that's what you'd use it for. So as a rule, generally, we don't trade those on weekly, and therefore we don't need the 21 HTC. Right, So that was GBP Oz. GBP NZD, again, the Kiwi cross is not giving us nearly as much fun. Technically, this is still a trend. So last week did give us a bullish impulse candle. It is outside of the channel. So do bear that in mind. If you are purely a channel trader, the fact that we had an outside close there does mean that you could start looking for bullish daily impulse trades. So we've got the pullback here on daily already. So all you need is that bullish impulse candle, and Bob's your uncle. So obviously, for us to trade this on H4 impulse, we'd need to be outside of the channel, but bearing in mind that if you're purely a WM pattern trader, then this is stacking up to be a valid W pattern as well. And also, of course, if we do get that outside close with a bullish impulse candle here, closing outside of the channel, then even for your channel trading, it would be valid as well for H4 impulse. But nothing else. So we did trade a lower time frame overlay when this bullish impulse wave on daily broke down, the cyclicity broke down. It didn't produce a profit though, just a very small loser. But nevertheless, we are basically waiting for this bearish phase 2 on daily to come to an end, and the bearish cyclicity here on H4 looks like it has broken down. Still early days. Let's wait and see what happens. But definitely something to keep an eye on. Right, CAD Swiss. So nothing much to speak about here on weekly time frame. Inside bar, be it bearish, doesn't really make any difference. Very much inside of the channel. Another example that at some point in time in the near future, our channel boundary is going to move up to this point, which means that right now we are testing the support level. So do bear that in mind. That's coming up soon. Let's just check it out in daily. It's nothing, again, similar picture with those hard bounces that we had the week before last. Nothing really tradable for us. Aussie Swiss, definitely very tradable, as we have been talking about for quite some time. So here we have weekly time frame, long, nice, extended bearish phase 1 wave, following that bearish impulse candle that we had a few weeks ago. So this has been on the cards for quite some time. Nothing really changed based on our analysis from preceding weeks. We did get a setup to short this, obviously, on daily impulse. So where are we talking? 1, 2, 3, 4, 5. So I think close Monday. I think we were talking about this last week, is a brief discussion around this on trading it as a hybrid. But definitely the short for daily impulse was valid, and obviously that would take profit on Friday. Very much inside a bearish phase 1 still, even though today at the moment, typical Monday morning activity, pulling back. But it's just a phase 2 at the moment on the H4 time frame in this bearish trend. So the hybrid went on to hit take profit very nicely as well, as did both the standard H4 impulse strategies last week. So this really added to our profit for last week. It's made a big difference, to be honest. These few pairs that we got here at the end of our list. And also Aussie CAD on weekly, as we discussed last week, it just closed outside of the channel, which meant that we were okay to trade this using the daily impulse. So with single time frame analysis, obviously you had a short setup and you'd still be in this trade at the moment. But that trailing stop just a smidgen outside of break even, very, very close to break even on the daily impulse for this. Now, technically speaking, you might say, well, was it is it the daily impulse or a hybrid? Well, to be honest with you, I don't really care which way you look at it, but it's not really a hybrid, because we'd expect to be in a phase 2 on daily. So, and that's not on weekly, I beg your pardon, and that wasn't really the case on the higher time frame. But you could argue that with this breakdown in cyclicity here, it was in fact a phase 2, and that's fair enough. Either way, you would have taken the short over there. So that's all good. Another nice one. And obviously, once we did get the outside close, which only happened Thursday evening, you would have been looking to short this on H4. Here it is, standard H4 impulse. And if you were using standard targeting, that would have also hit the take profit. So quite a nice one there. Pulling back at the moment. Those of you who treated this as a hybrid, fair enough, because we had that breakdown in cyclicity over here. Then we had the resumption, phase 1, phase 2, and looking for that bearish impulse candle to signify the end of that, which we got there. So either way, makes no difference. Just the targeting, basically. Aussie Kiwi, interesting. We finally got that outside close after quite some time, has to be said. Also bearing in mind that this is going to be the channel boundary in the not too distant future. So yeah, there we are. We're outside of it, which means that we're away on trading this with the daily impulse. Unfortunately, it's a bit late for that now during the course of this week, because we had that bearish impulse candle already on Thursday night. So you need to wait for that pullback and then another setup to short it in the future. But obviously outside, again, also on daily time frame, means that you can look to trade this with the H4 impulse. So there was a setup with that previous. Well, I think if you were being quite aggressive about it, then you would have potentially shorted this already. But yeah, so just make sure you're following the rules as you know them. Kiwi Swiss, a similar one again. Remember, this channel boundary is going to be coming up here in the future, even though at the moment we are still inside of it. So we're just waiting for that. And also, it's not a valid pattern either. We have had some interesting movement here. We did get an outside close here on Wednesday night, I think it was, but then Thursday pulled back inside of the channel again. And then Friday bouncing outside again. So it's definitely on the breakout side of things. If looking at the H4 time frame, if you'd looked at the breakdown and sequentiality of cyclicity in this phase 2 wave on daily, which is effectively that single candle retracement, and looking for that to come to an end following that breakout, then that would have been it over there. Obviously, that is a hybrid approach, so slightly deeper target there. But 1, 2, 3, 4, 5, we're not able to trail the stop any further yet. We need to wait a couple more hours for that. For those of you who just trading the standard H4 impulse, though, that would definitely not have been a setup for you. Kiwi CAD on weekly inside of the channel again. You know, another example of New Zealand dollar pairs not really giving us much to work with at all. Okay, so that's the currency pairs. Let's just have a quick look at gold and a few of the indices. So gold on weekly time frame, we just got this low ringed with last week's bullish candle. Nothing really impressive about that. What that was represented by is just a retest of this resistance level and Friday rolling over. So nothing happened there. Let's have a look at the Dow, new all-time highs. There's the weekly time frame pushing outside of that channel boundary again. Let's wait and see what happens. Oops, that's not what we wanted to do. Let's just bring that up here. So you can see last week it spent the whole week basically just pretty much going sideways and testing the new resistance level that was formed on Monday. I think it was last week, Monday, Tuesday, Wednesday, yeah, last week, Monday. So that's the Dow. The S&P typically is a little bit has a little bit more momentum as a rule, but likewise it's still respecting that preceding high. Just been going sideways in the last week, but it's certainly pushing for a continuation. It would appear in any case. So, and then finally the Nasdaq, similar kind of picture, a bit more of a pullback than the others, which is typical as well, Nasdaq being the most volatile of the 3 US indices. But yeah, nothing really going on at the moment. We have had a breakdown in cyclicity for the moment there. Right, so that's pretty much it in terms of the instruments that we're trading on the funded accounts. Pino's asking, what's the difference in targeting between a hybrid and impulse? Well, okay, so in principle, remember that the hybrid is, you know, we're looking across 3 time frames very often. So you might be using the 4-hour time frame to identify the end of a phase 2 on the daily time frame, which is part of a trend on the weekly time frame. So remember, if you're trading a daily impulse, similarly, you're looking to identify the point in time where the phase 2 wave has come to an end. So when you get that impulse candle on the daily time frame, which is the final signal for a daily impulse, remember that you're looking to catch the meat of the next phase 1 of the trend on the trend on weekly. So that's basically what we're looking for. We're trading the weekly time frame with the daily impulse. What you're doing with a hybrid strategy is you're going down one time frame further to identify the breakdown in cyclicity on the lower time frame, which tells you that that trend, which represents the phase 2 on the daily time frame, has come to an end. So if the trend on H4 has come to an end, the wave on daily has come to an end. So you're basically looking to answer the same question. But if you are now effectively using the H4 as a signal or execution time frame to replace the impulse candle on daily for the daily impulse, you're effectively trading the weekly time frame, which means your targeting should be set on the weekly time frame. So hopefully that logic is clear. For those of you who are new to hybrids and so on, please don't worry about that. It will all come clear in the future. Right, any other questions, folks? As I say, it's been reasonably quiet trading time. There's been enough trades, and if you were just following the rules and just taking the trades which are absolutely valid and without chasing anything, then last week was a pretty decent week. And in fact, it is continuing into this week. So just looking on one of our test accounts for the trade manager, noticing that, yeah, still got 8 trades going, many of which already moved to break even on that. Good, folks. Well, that's it from me then. Please remember to provide any suggestions or requests for training to us. I really look forward to going over some of this material with you in more detail. Anything that you need clarity on across all of the topics that we discuss, our technical analysis and our strategy rules. And also, if you're thinking about risk management and how that ties in as well to the psychology of trading, all of those topics that we covered in the past, if there's anything you'd like me to go through in more detail, then please do submit those training requests, and we will cover it in a training session. So Dina, we will do a training session this week if I do get a request for a specific topic from more than, let's say, 3 of you. But please do submit those training requests. So if I only get one, then I may well just address that with the person individually. But otherwise, if there is anything that you would like me to cover, then do submit that request. Right. You're welcome. Thank you very much, Pino. Thank you, Greg. Thank you, Gary. Gary's asking if I could focus on the hybrid and overlays and trading the future. Well, I will do so once we have got the training up and running inside of the academy, which will happen in the future. So yeah, keep an eye out for that. You're welcome, John. All right, guys, have a fabulous week. I'll chat to you later. Bye for now.